Hey traders, Nick here looking at AFRM. They reported earnings after hours today is Wednesday, and the stock is getting pummeled. I don't know what that is, let me see, on top of being down today. So after hours, the drop is 20%. So clearly a lot of enthusiasm has been priced out of the stock. So this stock has history. I think it got caught up with the 2020 run-up of Cathie Wood stocks, and it paid the price dearly because the combination of Bitcoin also falling. For some reason, this one, Square, PayPal, SoFi were getting punished, it seems like, with Bitcoin. So it doesn't matter why they're falling. Let's see if we can trade this. So I kind of skimmed through the results. The top line, it tells me that it seems like this is a disappointment on expectations, not on a change in the story. Let me clarify what I mean. But before I do that, if you like this video, give it a like, discuss the content in the notes section below. It's open. Also feel free to share it and do subscribe to the channel. All right, so back to what I mean. So the business model is not broken. They fell short of expectations on estimates. The one positive note is that they beat sales. They grew sales 10% or more to last year this time, which is better than Amazon. Amazon was single digits, which is the mother of all growth companies in the long term, right? So it's not so bad of a story from that perspective. Okay, 10% is not huge, but it's definitely not shrinkage. So that's one point. The other one is that they're actually reducing their overhead by about 19%, which tells me they're now focused on profitability as well. So they're trying not to squander their penny. In fact, I think, I don't know exactly the words, but management mentioned that they're going to put priority to projects that improve margins. So basically reduce waste. So this is a company that is still growing almost barely, but double digits, and they're focused on improving the bottom line. So it's not a bad story. It's just a disappointment for now. Big disappointment, apparently, from the market's reaction. So how can we trade this? I'll zoom out a little bit to see if I can find support zone. But first, I want to remind you that this is a stock that has rallied a lot. How much is a lot? If you call this base, which probably was an all-time low, it rallied 160%. It gave more than half. That's usually half, plus or minus, they call that the golden zone on Fibonacci. Plus or minus one or two zones is fine. So I would imagine that there are some buyers inside this box. So how do I get long? When a stock falls this fast, the easiest way for me to get long is to use the options. I don't want to buy calls. I don't want to load up on shares. This is not a great story, but it's definitely not a reason to get out in panic if I'm not out yet. So if I don't have shares, this is what I would do. If I have shares, nothing I can do. I don't even touch it. I didn't learn anything new. So me not owning shares, wanting to nibble, if I don't own SoFi, PayPal, or Square, I could. And if I do, I would buy a small position, like 20-30% of what I want to own eventually. I wouldn't do that all. By the way, this is not advice. So I'm telling you what I would do. I like to use options. So on bad days, like tomorrow when the market opens, the puts are going to be extremely hot in this stock. So I will consider selling puts to own shares. What does that mean? Instead of buying my shares at 12 or 13, wherever it opens, I'll say to somebody out there, hey, if you want to sell me your shares at 10, I'll take them. For that privilege, they'll give me money today. So this is called selling a put. I'm giving somebody assurances that I will take their shares at 10 if they call me. If not, I made their money. It's like I'm their Allstate. But I have to be ready to own shares. Nobody should sell naked puts. That's what it is, unless they're ready to own shares. I'm ready to own some shares if I get a sign. So I'll be looking to sell puts into this fall. Hopefully it will be a bad day in the market too. That would make it even better. Like if the VIX explodes and these puts are hot, then the premiums are heavy. Okay. Now the alternative to that is to sell a put spread, a bull put spread. You've heard it. I call them credit put spreads. And then I'll pick a time to where I'm not going to get blown out. So put some time on the clock. Of course, the easiest thing to do is to buy some shares and eliminate time and make it an investment. I'm talking about blending the concept of trading with the intent of taking an investment if it just so happens to be that. What does that mean? Say I sell a $10 put. And again, I haven't looked at the premiums. The market's closed. But tomorrow, if I like the $10 put, and let's say I collect $1, so that's $100 per contract, then I may win one day wake up owning 100 shares at $10, my break even would be $9. I don't think it'll be a bad thing if I'll start losing money here. So that would be my train of thought. I don't care what everybody else says. I don't care what the estimates were. I don't care what the earnings were. This is a growth story. I would respect it as such, and I would judge it as such. They spend a lot of money, that's fine, but that's what growth companies do. They just told us that this bar is going to be better. The growth is on the quarterly basis is not as impressive anymore. So again, it's not a great report. No, I'm trying to trade the price action, trade the disappointment. Some people are going to throw a fit tomorrow. Maybe somebody's overdoing it, and I'll try to take money from them. That's it.